Automation and robotics, two very popular buzzwords in today's tax world. We've got Head of Tax at Australian Unity, Mark Bird, who will be taking us through how that's impacted Australian Unity. Mark is responsible for the management of and coordination of tax matters for the group. He's also held tax leadership roles at Village Roadshow and CUB. Mark regularly presents and publishes articles for key tax issues and adopts a very progressive and innovative approach to tax. Mark will share with us his journey of implementing a tax transformation process for the Australian Unity Group. So please welcome Mark to the stage.
The fact that I'm having to work through this technology probably indicates that there might be a slight exaggeration about all this, but we'll see how we go, right? Look, the truth is, I don't know whether I'm the frog, the pot, or the fire. Right? I was asked by Darren, thank you, and Shine Wing to do a presentation on what we've done, on automation and robotics. And I guess the first observation, I said, why ask what we've done? There's nothing new. I started to think, and I said, well, there probably is. And you know, when you're so obsessed in your own little world, you're not really aware what's going on around you. And I guess there's some stuff that's happened in our business, which I'm sure it's happening in yours as well, that may be happening in one division, or the market dictates things that are in a certain way. Your clients demand that they be able to access their products and services 24/7. So your IT department is obsessing about some sort of robotic interface that can deal with basic questions from a customer. So, I mean, you know, these changes that I'm going to talk about, they're happening for all of us. And I guess, you know, the analysts sort of frog, you know, pot of water, they just put the water, just a gross concept in itself, all these frogs. But whereby the frog thinks at first it isn't too bad, but then it becomes a bit warm and says, oh, it's not too bad, it's like a warm pond. But after a while it becomes a bit too late and the frog itself is dead. As I said, I don't know where I am. We'll see how we go. Look, I just want to give some of this won't be new to you, but I must admit that I've picked up this stuff because I've had the opportunity to go to a couple of international conferences, and it is amazing to see what's happening in the tax world on the VAT space more so than anything else. And I can speak firsthand to that. And some of my staff in the audience, and they know that I come back from this conference saying, look, we're doing it now. And of course, a year later, I said it last year, we're actually doing stuff now. So I just want to introduce the concept of Moore's Law. Now, a lot of you have probably heard of this, but it is important as a context. It is a theory that goes back 50s, where, you know, it literally, the general proposition, I've done a paper and you can go and think of a paper, but it's a proposition that the power of a computer will double in capacity every 2 years. Now, there's a debate in the industry as to whether that goes like that or not. You can imagine it starts here, but the graph literally goes up like that. So you're doubling from, you know, the expanding base. It is real. And the classic example is the technology interface on voice recognition. All of us have cars, may have cars or a device where we play with voice recognition and the damn thing doesn't work. Say call home and it dials Malaysia. So, or Russia, whatever. But it's getting better. The classic example is my voice recognition in my car when I first bought it was jack shit. It didn't even work. You know, people were confusing all sorts of things. It would be a laughing stock. You get so bloody frustrated with it. And then 2 years later, I got my car service. And I said, my voice recognition system. He said, oh no, we've got to put in the computer, got to plug it in, because it's all plugging now. And they chucked new software. And I said, what's that mean? He said, well, the software now works. I said, well, that's something you might have told me before the car. And 2 years of frustration. But Moore's law is that the way the interface works with voice recognition is done completely differently now. The processing power of a computer literally treats this whole software platform completely different than it did 2 to 3 years ago. It now looks at the software, looks at voice within context of what you're saying, because it has the power to do that. It searches. That's just an example. But where that change is going to be? We're going to have changes, and this is what we're already experiencing in base economic models. You're going to have your markets move. You're going to have consumer demands move. If your industry is heavily dependent on products and services that do not change with the digital economy, then the market will dictate that you will change in order to survive. That's going to impact us. You're going to be within finance departments that have decreasing budgets. You're going to get new labour hires or something. We've experienced that. The labour hires are going to be different. They'll say, you know what, junior accountants, there's no such thing anymore. We had a conversation the other day. Junior accountant is literally leaving. The question was posed by 2 people in the room, should we be looking at a robot? What does a junior accountant do? They do reconciliations. Well, Blackline does that. Blackline's a computer software package. It does reconciliations. So bank reconciliations are done by computers. We all know that. If anyone that's had any interaction with small business knows that Xero, MyOp, they all interface direct data feeds to the bank, and they're all rule-based. Bank reconciliations. My first job as an accountant at the tax office was doing, remember the big ledger books? I'm sure they're still around. You see them sometimes. And you know, I'm out by $48 or something. This goes to bank charges. We've all done it. But the truth is, you know, these things are just, yeah, as I said, I'm showing my age. But the, you know, cost structures that have high dependencies on labour will also change. The cost is not going to be sustainable. I had a classic example of this with automation, and I'll get on to that. And as I said, about client expectations. Now, a good book to read is The Professions by R&D Sussman. And that's a very interesting observation of technology in the professions and what's happening. And if you're a lawyer, as I am, they predict that there'll be major changes in that profession as well. But that's hotly debated. He gives up on accounting. He sort of says, well, that's a thing of the past, so I'll be dead in 5 to 10 years. So thank God I'm a lawyer. I'm also a chartered accountant. So, you know, it's all a bit scary. But the truth is, technology in the professions, what does it mean? The reality is, knowledge and knowledge delivery will be different. And all of you know that. I mean, how many people use Google to search for ATO rulings? All of us, right? Who uses the ATO website? Because they readily admit that theirs doesn't work. And who's asked Alex a question? I had a debate with Alex. And then I was thinking, hello, Alex. Well, can I rely on this? Because, you know, you've clearly given me the wrong technical answer. Where's the reliance aspect? It's SharePoint. Anyone has SharePoint in this room? Yeah. Who's lost documents on SharePoint? Yeah. But I've lost it only a couple of times because I'm an old dog. You know, I literally said that's not going to happen again. Can I say, SharePoint used properly is one of the most powerful tools for a tax team that has the diverse client base. We, Australian Entity, have how many divisions? 5. But within that division, we have subdivisions, right? So you have a division, and they all have different tax attributes. So the challenge is, we would get the tax office asked us one. The tax office asked us in an audit. They said, "Oh, we want a copy of. No, we want to know your advices on the GST in the last 12 months." So we went to SharePoint, put the list into Excel, and sent 2,954 lists. That was the document in Excel. And I said, "Oh, that's a lot." I said, "Well, you asked for it. That's how it is." How any human can keep track of that level of interaction on advisory matters? It'd be impossible to do that manually. So, an electronic solution, SharePoint, used in a structured manner, is very important to a corporation's tax risk management because, one, you keep a copy of the advice, you know what risk the advice is, and then you can escalate to the corporate framework. So, in-house tax teams, I have a team of, depending on the month, it's 12 to 13 people. I've got a traditional model that we have compliance people and tax advisory staff, and we'd all have that within our teams. In the last year, we've brought on a technology person that's solely focused on core systems and technology, and that person's responsible for building what I'm just about to get into. But I'm also going to introduce this concept of an electronic FTE. So we believe in the next 2 years, I'm looking to have 2 further FTE, but they'll be electronic. Doesn't make a lot of sense, but hopefully I'll make more sense in a minute. I want to speak to everyone because, one of the speaks, whether the modern finance function will even exist in the future, will probably exist at a different sort of level. The accountant is going to be having a lot of changes. And we're obviously in a world that wants more for less. And everyone within this room would know what that means, in the sense that, you go and want to hire people, well, it's just not going to happen because budgets are budgets. And we all have to get the resources. One thing I'm learning in what we're faced with, I was at a CTS conference and the commissioner made it quite clear that we had hired 700 data scientists. So if you want to hire a data scientist out there, you know what, because the tax office has them all. The truth is that that's a profession that if I had a child at university, I'd be saying no, I'm doing anything with data and science in the car. It's going to call for us to communicate in a different way. The truth of the matter is, as I said, there will be expectations from committees and boards that the organisation will be able to deal with data in a different way. There will be zero tolerance for lost pieces of advice or uncertainty on whether a tax decision should be reported to the board. Systems should be in place. The technology is alive and well. We talked about the various categories of, for those in the room that have to comply with the reportable tax position schedule, that actually defines specific categories of tax risk that needs to be reported to the ATO. It's something that would be very difficult for a large corporation to do at the end of the process, because you actually say, well, what letters of advice have I got on various matters for the last 12 months that are represented in the tax return? And if you're a large corporation, that'd be very difficult to do unless you have a process to capture that as and when you commission the advice. The new technology is around us and is not something to be feared. I believe it's something that should be a partner. I introduced this concept of electronic FTE and we're going to embrace it. It's just a matter of literally understanding what that means. Robotics. Okay. I'm not talking about R2D2, right? I've met an R2D2 at a conference once. It actually had a debate with a tax practitioner about the application of VAT in Spain. The conversation was going quite well. It was actually very articulate. It was an Alex at work. And it's based on IBM Watson's technology, which most of you will be aware. It's an advanced artificial intelligence that interacts with the question and can literally build on that. But the conversation got very confused when the person asked what's the treatment of capital items in Spain, and the robot kept on saying the capital of Spain is Madrid. It got a loop, and so then they said, oh, well, we'll close that down. But the truth is, some of this artificial intelligence will impact us. But I'm not talking about artificial intelligence. When I talk about robotics and automation, I'm talking about something very simple. Who in this room used Word in 1980 or 1992? Microsoft Word. Okay. You would all be aware, probably, of putting systems in place to do mail outs, playing with that, and trying to do little things to make it smarter. So if you look at a robotic or an automation in that context, that's what we're dealing with. We're just looking at making things smarter. So you could have a process, for instance, to be specific in a tax world, that you have your general ledger set up in such a way that's rule-based from a tax view. So you have every tax adjustment that you can conceivably have in your corporation rule-based. What does that mean? Well, it's transformational if you can do it. If you can do it. It takes a lot of effort. But once, I can just tell you, once you have a business driver of having to make that happen, you'll be surprised what you have to do. Where it's not just for the tax office, it's for something different. You may have a bonus scheme that is linked to, one of its componentries is net profit after tax. That means you no longer have the luxury of doing statutory unders and overs, because the bonus scheme has already been determined. It's determined at day 8 after year-end close. So imagine that your CEO comes to you and says, I have to have an accurate tax expense by day 8 at year-end close. So we all probably do know what income tax expense means. I'm sure we do. But well, that means that you actually have to have a heavy focus on your non-temporary differences and get them into your general ledger. However, it's a task. It's something that can't be done overnight. And what follows from that is that you have to integrate it into your management reporting system on a monthly basis. So you have that as a base level challenge, that it has to be accurate, it has to feed into your management accounting numbers. You'll be surprised how focused you become on making this thing happen. So this is what I call a traditional compliance model. And you know what? We've all been there, and we're all probably still a little bit there. Nothing wrong with it. It works. You know? We have a situation that you may have limited tax involvement with the business. You may do advisory work, project work over a period of January to June. Then the obsession comes with statutory accounting, making sure that process is right, trying to understand what that accounting standards or the accounting standards mean, wrestle with the auditors over adjustments, the statutory audits, that is. Then you have a traditional process I call like a data integrity check, where, you know, have I put a car in repairs and maintenance, all these type of things. may happen in a large organisation. Ensuring that the tax return numbers are right, and then we lodge with the tax office in January of each year. This is, traditional June end compliance model. We'd all be aware of that. As I said, I'm not making any statement as to whether it's wrong or right. It's just is what it is. We all do it. But the management accounting lens is a little bit more focused on the period 12, and what we call period 12 and period 13 adjustments. And that's where you actually have to be focused on getting the numbers as right as you can, given the processes that you've done during the year. And of course, that process is very compressed. We all understand that. I don't know what your organisation's like, but ours was about 15, 16 days or something. You've only got to actually have that number right. So, and of course, everyone hates it when it's wrong, especially if it's materially wrong. Because you've got to sign the accounts in August. But the truth is, changes will force this model to be revisited, and that's exactly what happened to us. I've got a big team. I'm grateful for the fact that I do have a big team, but the truth is we were faced with a situation that our tax expense under an ANOVA process had to be refined to an extent of being basically only dealing with deferred tax positions as opposed to non-temporary tax positions. And that will always be the case, because you're going to have situations in us where a health insurer as well, we have big holdings in product trusts, and of course they don't get their distribution statements out until, I don't know, late July. So you just literally can't put that in. But we actually do have to do a forecast as to any non-temporary adjustments coming out of that now. We actually have put accounts in place. We have an automated rule. We've used a whole series of accounts in our general ledger called tax-only accounts. Naturally, we have to have a debit and a credit there. We'll call them fake news, if you could use that term. But those tax numbers are literally picked up as an adjustment that feeds into the robot, our tax robot. Reduction of resources. Well, I'm not alone. I have a junior tax accountant resign. I'm not going to be able to replace them. So who's going to do the work? I have to still do the work. So we have to look to technology of how we can do that. And you'd be surprised as a change process what that does, because the reality is it's a 0-1 equation. It's no debate. You just don't have it anymore, and you still have to do the job. So you either automate or dissipate. So go the other way. But I guess this causes increases in efficiency if you go down this pathway. And as I said, we actually have automated adjustments in our general ledger. We have what we call a whole 4 series of accounts. So for instance, I could use, I know anyone own retirement villages here? We do. Very complicated business, it's heavily regulated. But we have tax adjustments coming out of our retirement village network. We have literally now know where those tax adjustments come from, because we actually had to change the accounting to make sure that we could pick up the rule. Our robot will literally define the tax rule. It will say anything to do with a lease turnover will be a permanent tax adjustment. We say, oh, that's all very interesting. Then we had to understand the accounting, right? So we have to say the lease turnover may happen in the balance sheet. We said, well, that's interesting. How are we going to pick that up? So we actually have to create when that lease turnover happens, we actually have to create I'll call it a tax-only journal in our 4 series account to make sure that happens, because otherwise the robot won't be able to pick it up. But the business wants it to happen, because if that doesn't happen, they don't get the right tax number. That feeds an incorrect number into their management accounting. It feeds an incorrect number to their board reports. So you have that buy-in. You have that buy-in straight away. And without that buy-in, it's really hard to do. But once you get that management buy-in, once you get business wanting it to happen, it will happen. A lot of people become interested in tax all of a sudden. Now that's in itself is interesting, isn't it? This is where my FTE becomes important, because before I would have an FTE dedicated post year end to look at the accounting to determine the tax adjustment. But now I've got the tax adjustment linked to the general ledger. So I don't have to do that anymore. So what happens to that person? Well, they actually, in this case, they're doing other things. But that becomes, the resource itself doesn't disappear, it's become by an electronic FTE. The process still happens, but it happens at a different time. The process happens as and when the adjustment occurs for your accounting process. And that's where the automation of the business rules and the management accounting systems are important. As I said, the opening of the accounts, it's critical to it, and the detailed tax report is part of your management accounting process. So this is what the new model looks like. Once you're able to do this, and it's not easy, but once you're able to do it, the tax expense is operationalised into your accounting reporting. So you no longer have this process that's back-ended. It's all front-ended. And it is able to be done. We've been able to do it. We use TM1. You'll all have your own systems, but the technology is there to do it. It's just a matter of literally engaging with the people who are literally in charge of your core accounting systems to say, because they would literally have their monthly management reporting pack, being able to engage with them and say, well, we have to put some automated, sophisticated tax rules in that process to feed from the general ledger. And, you know, I looked at this as something like the horse and the tractor. I mean, to be fair to the horse, it still ploughs the field, it still does the job, but the tractor can do a lot more. Susskind raises a point in his book where he said that he went to a lawyers' conference in the mid-90s, and he said that a lot of legal communication will happen by this thing called email. And he was literally laughed off the stage. And we were involved in a transaction last night, and the whole team was literally up all night for various parts of Melbourne, working from home, some in the city in the lawyer's office, doing tax clearances, accounting clearances, various legal clearances, all overnight, all from their home, all via email. This is not unusual, but this is the changes that literally we've experienced in this room. Well, not so much the horse and car, that's not far, but the email thing we've experienced. I mean, I remember when at After Anderson years ago, where I don't think I even had a computer first started. We were able to access the library. We had a typing pool. I remember that. There were about 20 ladies, and I'm not being sexist, they all were ladies. In the typing pool, you would literally, you had your dictaphone, we all had dictaphones, and you know, we'd just copy chunks of the federal tax report, and that would be the advice and how it goes. No, it's more sophisticated than that, obviously. I'm giving away LP here. These things I wanted to mention. How much I've got? Yeah. These things I just wanted to mention. I'm a big fan of SharePoint. People in my room that are from my tax group know that I am obsessed with SharePoint. I look at it as a highly sophisticated risk management tool. It has permanent record features about it, which protects the corporation in respect of future tax investigation. I also want to talk about search engines. in particular, you know, what people use today, and then briefly talk about Tableau. But you're not going to be able to see this deliberately so because it's confidential. But the point is, this was a federal court litigation matter that we were involved in a while back. But there's about 58 documents here. Anyone that's been in the federal court knows how Byzantine the process is. And beware of lawyers who give a quote, because they'll always find a reason to double it. And so it's not in scope. But this is a permanent record feature within SharePoint in the sense that it will allow you to keep the records in PDF, but in date order. So at any given time, this is like a set forget thing because it's been settled with the tax office. But the permanent record feature is fantastic because it's here. Imagine 10 years ago you'd had a file. It would go off to storage. The PA would have been made redundant or revitalised or whatever happens to them. And no one knows where the file is. And these things happen. That's the reality of large corporations. But electronic systems, SharePoint, no more. That's just fantastic. Talk about risk management. We've got in SharePoint as well, we've got a sophisticated tax risk management system. We rate each tax matter in accordance to risk. We're an insurer. That's how we make our money. That's our business. Risk is our business. So we literally have mitigants to apply. It's all very standardised. It's all very insury, I can say that. But this is done within SharePoint. It's just literally putting some rules in place. And more importantly, and I can't show you this, but that gives you what we call a tax risk score. And we can literally produce a graph to our board, which we do. And that allows them, as a board, to know what tax risk the corporation is, and we're able to put a graph in so they know whether the graph has moved up or down. But that can be done within SharePoint. That technology is alive and well. It's just a matter of getting the people dedicated to the process. And I did mention, sorry, I just want to go back here. Look, I'll talk about the search engines. I mean, it's going to be the death of CCH or Thomson Reuters about their search engines being more effective than what currently is for free. And I think I'm not the only one in this room that thinks that. We sit and say, I'm not sure where that gets us, but obviously it's there and it costs nothing. Tableau, now there's going to be a speaker that talks about Tableau that's going to be a lot better than me, but Tableau, I can make an observation, it's fantastic, but damn hard to use. But being able to use it in an initial data upload, it allows you to look at a complete set of data, and it's very, very powerful. We picked up an error in our GST processes that would not have been picked up other than by Tableau, or something similar to Tableau. There's probably other things out there, but I was able to look at a data set. We have complex GST rules in the business, and we're able to define what those rules are, and it picked up an error. It picked up an error over a period of time and allowed us as a governance process to fix it. So for those of you who literally haven't used it, I would suggest it's something you should be looking at, because the tax office use it regularly as well. These are just things I've spoken about Suskin a bit, and for the accountants in the room, I'd suggest you probably don't read it. It's very confronting about what's ahead of us in this world. What's happening in Australia, I haven't seen a full robotic in action in Australia, but I have seen it in action in the overseas. It is coming. I've seen a robot do a complete payroll function. Literally someone coming in to literally apply for a job. It accesses their information, checks with the IRS, the data integrity features, does the passport control checks, all robotic. And I had a CFO tell me over coffee that robot had saved them $2.23 or something like that US per product that they sell into the US. That gave them a competitive advantage over their competitors. But interestingly, the classic cost structure graph was no longer like that. As they hired people, it was flatline. Because the robot doesn't have sick days. It doesn't get into vacuous discussions like myself on Game of Thrones. It doesn't get distracted. It literally, it doesn't have annual leave and it doesn't go on strike. It's, these robotics are here. I've seen it lodge a VAT return. I've seen it do the whole thing. It's extracted data, check the data to predefined rules, and lodge the VAT return. My paper goes into this detail. I've been told that we will know this in about 12 months when we put our GST process to tender of how much these things will actually cost. There's a lot of things in the marketplace, a lot of talk in the marketplace that they can do this, they can do that. The rule of thumb is it's 60% of an FTE and the payback is within 1.5 years of a robotic function. But you can't implement a robotic function until you've literally done a business process re-engineering design of the whole process, mapping it all out. And that's where the cost is. It costs a lot of money. But that's something that we're just about to embark on that journey for our GST, because we have to. That's the reality of it. We need data, we need it quick, and we need it with different resources. Changes, everyone knows about their mobile phone. My God, News Corp and the Age. Here it is here. This is my mobile phone. I was at the doctor the other day. They're sending me updates, just to distract you whilst you're at the doctor. But also NetBank. Look at NetBank, what it does. Someone hits your credit card with whatever that was. It was Wikipedia, $10 US. It sends you a NetBank thing. Not that it depresses you each time something goes to your visa, I guess. But the point is that's where we're at. As I said, I'm not sure where I'm going to be. I'm 53 years old. Hopefully I'll be the frog, which says it's a little bit hot. But the changes are going to happen. It's nothing that we particularly ask for. They tend to happen. They happen around us. It's up to us to be vigilant and try and do as much as we can to keep up with technology. But a lot of it's out there. It's just a matter of asking and challenging. And hopefully we're jumping out of the water. It's a really bad information. But anyway, thank you for your time. I'm happy to take any questions.
Okay, those on the webinar have been a little bit quiet, so any questions that have come through since then? Or might throw to the room then. Anyone with a question for Mark?
Mark, very engaging presentation. For companies seeking to do what you did, the hard thing is where to start. So what's your recommendation, the top 3 starting points?
Well, I guess, the start is hard. It's engaging with stakeholders as to the need for change. And I think without your stakeholder support, it's really difficult. Sometimes the change management model is interesting because people will say that they're on board, but whether they are or not, then sometimes you just have to say to people, oh, you're no longer doing that anymore. And you actually have to have a total job redesign. And that's what I did because the force of change was so great. And it's reiterating change on a monthly basis. To force the change to happen, it's important to have a KPI out of it. And so what I did with my management team, we've actually got KPIs and they're just folded into place now, that we actually have management tax reporting into their job functions, and they're held responsible for tax forecasting. So once you do that, it has to happen because there's just not enough hours in the day. So it forces them to operationalise some of these tax adjustments that I'm talking about into the general ledger, into their socialise it within the own accounting function to make it work. Otherwise, it just won't happen. It'll be the same discussion next year, the same discussion the year after. And then you're having that discussion and you are the frog in the water and you're literally boiling.
Does the ATO knows of the existence of your tax risk register and your graphs?
Oh, very good question. Of course. two things. It's privileged communication. That's the first thing. So they can know about it, but they're not getting hold of it. And also, it's a communication to the directors on tax compliance risks. So it's not accessible under their current guidelines, but it's a very good question. Very good question. But the truth is that it is a good question. It's a risk, isn't it? If you communicate forcefully with your board, how do you protect the communication? And yeah, that's why one of the good things, I'm a later lawyer in life, so now I have my practicing certificate. So I claim privilege, quite rightly so, on my communication with the board.
Emma, thank you for your presentation. Andy Lam from Shinery. But do you know, I understand you're doing all of these in-house.
Yes.
And not every business is going to have the resources of Australian Unity to do all of these. Are you aware of anyone out there and saying, you know, external providers that are looking into these robotics that you call?
They all say there are, and I'm sure Shine Wing does as well. No offence to Shine Wing. I would as well. I'll Shine. So yes, we know it. The solution is typically on top of an accounting process. So we're finding that it could be something as simple as Blackline, that you actually have automation coming out of the reconciliations. And part of that business case, because Blackline is not inexpensive like any piece of software, there will be a business case that calls for re-engineering of current processes, because we may have a situation that 60% of the job function is reconciliations. And that's not to be unfair to my accounting colleagues, but apparently the rule is that if you have a base level compliance decomposition, which is what the paper goes in about, and you basically look at a role and you decompose all the tasks of the role, you break it down. If you have 50% of that dedicated to base level compliance, then that is something that's right for automation. And there are software providers out there, but it's usually got to be looked at as part of a larger accounting redesign. It can't be looked at, oh, I've just got to do my batch process. But what's interesting is that we will be, subject to us being able to get our act together, but we will be out looking to do a business case to get together for our whole GST processes for the whole corporation, and that will be looking at for a full automation. We'll put that out. So we'll see where that ends up.
Excellent. We're a bit pressed for time, so what we'll do is on a question is it? We'll take one last question. Question
from Sharon. She's asking.
Hi, Sharon.
Who maintains a robot FTE, and is it in-house or is it outsourced?
It's a very good question. The robot FTE is will be fully maintained by us, and our staff system is maintained by one of my staff. One of my staff FTE maintains that system full time. That is her role. Once the system is fully operational, then she'll be able to get onto other things, to advanced Tableau, to its next phase and whatnot. But the important thing about a robot, and this is very important, I saw a robot, sophisticated automation, in play overseas, and I said to myself, what are the security protocols around this thing? What are they, you know? Because it's accessing multiple parts of key systems. And they said to me, well, that robot has to have an employee number. It actually has to be respected as an FTE within the corporation, have its own security protocols around it. And that's how they look at it. So that's why, you know, I look at my tax team. Currently have 13. You know, you talk to me in 3-4 years' time, I might have 15 FTE, of which 4 are virtual electronic. That means I expand my team. I'm able to do more things and do the 120 things tax office and Alex expects.
Thanks for that, Mark. Very interesting presentation. Please put your hands together, Mark.
Thanks, Mark.